daily dose of market insights. Very good morning to all. I'm Kelvin here, and today will be Tuesday, the 14th of October 2025. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and it's not investment advice. Past information is not representative of future results. All right, so as usual, before we kickstart the chart of the day for today, let's have a quick recap what has taken shape yesterday in terms of the relevant news flow, the economic data release, and their impact on those intraday movement of all those broad-based cross-asset classes that we cover on a frequent basis. So let's have a quick look at the key economic data yesterday. So yesterday, key economic data is very pertaining to this ongoing that very fluid trade relationship between US and China. So despite that hawkish trade rhetoric, either directly or indirectly, where US inflicted on China, the trade situation in China does not deteriorate. Okay, what do I mean by that? So let's have a quick look at the economic data that was released yesterday, which is China trade balance. All right, over here. So China trade balance of trade, I would say, the export year-on-year export figure for China for the month of September actually improved to 8.3% year-on-year from 4.4% year-on-year in August, and also from 6% what being penciled in as a consensus forecast. So it actually managed to beat expectation and rose above the 4.4% year-on-year print in the previous month of August. So what it actually means that despite China's exporting lesser goods to US, the rest of the world are still buying China products, keeping China economic growth pretty much on a firm footing. And that 8.3% year-on-year increase is considered as a 7-month high over here. And also export also grew exports. This China export growth primarily came from Japan, South Korea, Taiwan, and Australia, and as well as the ASEAN region, which account for the bulk of it at 15.6%, and the EU accounting also a significant bulk of it at 14.2% over here. So what it means that despite Trump pressure or the US White House administration pressure for the rest of the world to be less reliant on China products, but China export engine continues to remain resilient, which means that it also be able to actually meet the 5% GDP growth target that is being set up by its policymakers at the start of this year. And also what's interesting over here is that China consumer spending or consumer behavior also has started to turn to a much more optimistic state over here. So how do I know that? By looking at the imports number. So imports, viewed as imports as a prelude to consumer spending, all right, over here. So imports for China, imports to China, that means China imports year-on-year also rose above expectation, and it actually rose to a multi-month high. So it grew to 7.4% from a lackluster print of 1.3% that was in August, and 1.5% of what market has penciled in as a consensus, a median consensus forecast. So if you look at the import over here, right? So import actually growth to 7.4% year-on-year in September, hitting a 7-month high. So that actually also reduces the risk of a deflationary risk spiral in China as well. So all in all, it's actually very positive for the Chinese economic situation, and that also created a positive feedback loop into the China stock market yesterday. So the China stock market, if I were to actually share with you guys over here. One second, very quickly. So the CSI 100 right now is trading at 0.21%. So if you look at the chart of the CSI 100, yeah, CSI 300, pardon me. Okay, let me open up the chart, because there was actually a bullish reversal yesterday after that earlier sell-off from that negative news flow from last Friday, which is Trump threatened that additional 100% tariff. Okay, give me a couple of minutes to open up the chart, or a couple of seconds, hopefully. Come on. Okay, good. Okay, so let's go to the daily chart. So this is the CSI 300. So you realize that this is a strong bullish reversal Marubozu candlestick on yesterday. So earlier on, there was the sell-off that takes shape at the start. There was a gap down, negative 2.73%. Then thereafter, it actually rallied, closed at negative 0.5% with this bullish Marubozu candlestick formation. And today there's a positive follow through at 0.13% over here. So net overall, what you could see is that the Chinese stock market still remains on a resilient footing, and also the bounce actually takes shape right above the 50-day moving average over here. And if you throw in the 20-day moving average very quickly, let me share, put in the moving average, the 20-day moving average. Okay, my apologies, but I should actually open this chart first before the start of the webinar, because when the webinar starts, because of the bandwidth that's been taken, so it tends to slow down the TradingView platform. All right. Moving average, simple. Okay, open up the settings. Let me change it to 20-day. Oh gosh, come on. Okay, it's always the problem. Okay, give you a couple of seconds. Hopefully, okay, good, it's up. 20. Style, change a different color. Okay, put it to daily chart. Okay, you realize that the bounce took shape right exactly after the test of the 20-day moving average. And so far, the 20-day moving average has providing a good support on a medium-term basis since 8th of August, since 4th of August. All right, over here. Okay, so with that, that has managed the we call it allow the China stock market to maintain its medium-term uptrend phase. All right, and also the export numbers and the import numbers also continues to provide a fundamental support for this ongoing bullish medium-term trend phase for the China stock market. And very important, yesterday also the US stock market continues to shape that bullish reversal. So yesterday I do mention to you guys that whatever pullback that we will see in the sell-off on last Friday has more or less been subsided, and the US market continues its ongoing medium-term bullish trend phase after able to actually help on to certain respective support level that I highlight in yesterday's daily dose when I covered the full suit of it. So what is interesting over here is that this another yesterday we see the major US stock market, all of them close in the green. SPX up by 1.6%. The Nasdaq, being the higher beta stock indices, outperformed the SPX by 2.2% and also outperformed the Dow Jones Industrial Average by 1.3%. And the small cap Russell 2000 also continued to bask in the bullish limelight, up by 2.8%. And yesterday move on the US stock market has been further supported by AI optimism team play, where OpenAI yesterday closed another $1 billion agreement with another chip maker, which is Broadcom over here. So because with this, do not forget, in the last few weeks, OpenAI has been signing a lot of deals. So some of them they made as a circular deals between key chip players in the US semiconductor supply chain. So OpenAI with Oracle, OpenAI with NVIDIA, OpenAI with AMD, and now OpenAI with Broadcom. So that allow a positive feedback loop into the US information technology sector, which is the S&P information technology sector, closing deeply in the green, where it sent all the chip maker share to almost a very strong rally. So NVIDIA up 2.82%, AVGO, which is Broadcom, rallied the most, close to 10%, and it started to spread into the entire semiconductor stocks, creating a positive feedback loop into the entire mega cap technology space in the US as well, where Apple managed to gain 0.97%, Microsoft 0.6%, Amazon 0.17%, Alphabet, Google 3%, and Meta 1.5%. And because of this, if we were to look at the technical chart of all the major three US stock indices, very quickly, let me share with you guys over here. Okay, where is it? Okay, is that only the Nasdaq 100 managed to recover above its 20-day moving average after that last Friday dramatic sell-off over here. So the rest of the other major US stock indices, like the US Wall Street 30, still remains below the 20-day moving average, which is my first resistance that we highlighted yesterday to watch in our bullish reversal scenario bias at 46,400, 46,310. And even the S&P 200 is still below the 20-day moving average, now testing it, so we'll be at the 6,690 level. So given the fact that the Nasdaq 100 is the leader that managed to break through the 20-day moving average over here, and potentially that could actually follow suit for the rest of the other major indices, especially the S&P 500. Why? Because the S&P 500 today there will be a key risk event that taking shape, more impacting on the S&P 500 due to the sector weighting and also the stocks that is reporting their earnings today, which is the key US financial institutions. So later I'll share with you guys over here. So given that the Nasdaq 100 has really broken above the 20-day moving average and also cleared above yesterday at the 24795, and right now it's actually retesting it right now very closely. So I will actually tighten my short-term pivotal support yesterday, which I have at 24,290, shift it upwards to 24,565 for today, as my adjusted tighten short-term pivotal support for the Nasdaq 100 at 24,565. I repeat. So next two resistance level to watch in first step on the near-term basis will be at 25,030, followed by the all-time high area at 25,225. So that's for the US Nasdaq 100, leading the fort due to the positive AI narrative team play coming into the forefront yesterday, reinforced by that OpenAI Broadcom deal. All right, and also now shifting the focus over here to the FX market. So FX market yesterday is a rather mixed over here. So what we could see over here is that this is the 5-day rolling performance of the US dollar against other major currency as of now, 14th of October as we're speaking. So the dollar is now strengthening slightly against the Aussie and against the Kiwi, but remain kind of flattish against the dollar yen, and the dollar sterling over here at this point in time. So if you look at the 1-day rolling performance chart over here, so the rest of it is rather flat at this point in time. So if you look at the dollar remains kind of flat against the dollar yen, the dollar euro, and the dollar sterling, but kind of outperform against the dollar Aussie and the dollar Kiwi on the intraday base. Against the Aussie, the dollar kind of outperform against the Aussie dollar and against the Kiwi on the intraday basis, by having a minor gain of 0.16% against the Aussie and a gain of 0.18% against the Kiwi. So if you look at the technical chart of the US dollar index over here, let me share with you where's the chart of the US dollar index. Okay, so the US dollar index continues to be kept by this ongoing potential symmetrical triangle range configuration that has taken shape since the low of 1st of July. All right, so as we are speaking right now, price action now has a kind of a bearish reaction as it approaches very close to this upper limit of this symmetrical triangle range configuration, which is a intermediate resistance level at this level over here, 99.40. All right, so it's either inside this symmetrical triangle range configuration or a rectangle range configuration with the upper limit at 100.10 and 100.54 over here, this range. All right, so there's no clear at this moment dollar weakness or dollar strength, as price action continues to be trapped inside this rather choppy sideways range configuration since the low of 3rd of July for the US dollar index at this point in time. So one particular chart on the FX market to share will be more on the dollar yen over here. So you recall that dollar yen, yesterday we do have a neutrality stance on the dollar yen. So let me check where's the dollar yen chart. Okay, so this will be the dollar yen. Where is it? Yeah, dollar yen. So the dollar yen yesterday sorry, where is it? Yeah, the dollar yen. Yeah, this is the dollar yen. So the dollar yen, we do have a neutrality stance on the dollar yen yesterday. So what we could see over here is that we start to see a series of rising higher high, rising higher high over here. And also with this rising higher high on this dollar yen, there's also intraday push up today on the upper limit of my neutrality range at 152.45 over here, 152.45. So I'm watching this 152.45 very closely, given that we start to see a series of higher low that's been developed on the dollar yen throughout yesterday's European session and US session yesterday. So if today at the start of the European session or during later Asia session, we do have an hourly close above this 152.45 on the dollar yen, then that I could be more confident to flip to a short-term intraday bullish bias on the dollar yen, as you have as long as later we have an hourly close and a bullish breakout above 152.45. That if that scenario takes place, I will flip to a bullish bias, short-term bullish bias, using 15170 as my short-term pivotal support level. Next resistance level to watch on the intraday basis will be 153.65/90, followed by the major resistance of 154.50 over here. So why 154.50 is important? So if you look at the daily chart of 154.50, is in fact this confluence of these two key graphical resistance level. Previously, the congestion area of 28th of January and 10th of February, where price action got rejected at this level and kickstart a multi-month sell-off until hitting a low of 22nd of April 2025 at the 140 figure level. And also this 154.50 also confluence with this major descending trend line of the dollar yen that has been in place since 3rd of July 2024, where a major top has been formed after the BOJ intervention previously at the point in time at 161.95, around that level. That is 3rd of July 2024, forming a major descending trend line ever since then. And also this major descending trend line managed to cap that previous rally of 10th of January 2025 at the start of this year, hence making the 154.50 as a major resistance level to watch. And that could be also a potential tipping point for the bears of the dollar yen to revert or to actually meteorize into the picture again. Right, so that's for the dollar yen. That moving on forward over here is that gold continues to rally yesterday. So if you look at gold price, gold XAU/USD, where yesterday we do have a bullish bias. So gold yesterday added 2.33%, and in today's Asia session, it continues to extend its gains, fueling momentum play at 1.13%, and also the rise in gold prices also nevertheless also being supported by that debasement trade, and also that further expectation that the Fed will continue its interest rate cuts, as being praised by the CME Fed Watch tool. And one thing I want to share with you guys about this, one of these macro intermarket factor that is supporting this higher gold prices going forward is the continuous softness of the US 10-year Treasury real yield on a medium-term basis. So this is the daily chart of the US 10-year Treasury real yield. So real yield is a bit different from the yield. So real yield is I subtract it from that 10-year a 10-year inflation expectation rate as being priced in by the 10-year 10-year forward interest rate expectation. Put it away that I got it from the treasury protected bonds that I'm able to get it from this much more forward looking implied 10-year interest rate 10-year inflation expectation as being priced in this instrument. So I strip off the inflation expectation, I get the real yield. So a real yield gives us a better a gauge of longer term opportunity costs. All right, so we know that to hold gold in long term, if any real yield or real interest rate that is higher, that would actually increase the opportunity cost of holding gold. And if the 10-year treasury real yield continues to slope downwards, that means that opportunity cost for holding gold gets lesser, and that supports the ongoing bullish trend in gold. And if you look at the US 10-year treasury real yield, it got rejected right exactly below a key medium-term pivotal resistance at the 1.87% over here after a test of it on last Friday. And this rejection also rejected at the upper limit of this ongoing medium-term descending channel that has been in play since the high of April 2025 over here. All right, so given this bearish reversal in the US 10-year treasury real yield on a medium-term time horizon, right exactly below the 1.87% key medium-term pivotal resistance, and also it broke below or reintegrate back below the 10-year, below its 50-day moving average and its 20-day moving average, hence supporting this ongoing bullish rally in the gold price. So the gold price in blue is being highlighted below. So being said that, I do have new levels to watch out for gold for today over here. So that being said, that over here, let me highlight to you guys over here. So gold price, where is gold over here? Give me a minute. Sorry about that. Let me open up my screen again. Yes, this is gold over here. So for gold, this will be my level. So gold actually hit our resistance level 41,022, 4122, 41,150, 4184, 4189. So approaching this resistance level. So this will be changed over here. So right now it's showing a bullish acceleration, breaking above this medium-term ascending channel upper boundary. Then with the upper boundary, now this will be its pullback support level to watch. And given the fact that the hourly RSI now is at a overbought level, and this overbought level is much more higher than the previous overbought level in 8th of October and 23rd of October. So hereby increasing the risk of a minor pullback, but not a bearish reversal because there is no bearish divergence that is being formed on the hourly RSI. So minor pullback support level to watch will be the pullback support of that former medium-term ascending channel upper boundary / resistance now turns into a minor pullback at 4,117. Then I will use the previous all-time high area that was printed on 9th of October, which is last week, now turns into my Titan short-term pivotal support level at 4,056. So as long as this minor pullback didn't surpass below 4,056 adjusted Titan short-term pivotal support on gold XAU/USD, I will maintain that bullish bias heading up towards 4,184, 4,189, followed by 4,240, 4,252, which is a bunch of Fibo extension cluster level. Only a bearish breakdown below 4,056 will invalidate this ongoing bullish acceleration phase for gold XAU/USD to flip the bias to a minor corrective pullback scenario, exposing 4,011 followed by 3,943. All right, so once it hit this level 4,011 and 3,393, I'll be still on the lookout for bullish reversal candlesticks to flip my honors back to the bullish bias, given the fact that the price action still remains above the 20-day and the 50-day moving average. And if you look at the daily time frame of gold XAU/USD, there is still no bearish exhaustion that is being seen on the hourly RSI and daily RSI. So very quickly, let me share with the daily RSI for gold. Okay, come on, why is it not showing? Okay, so every time, when there's this ongoing live webinar, so when we try to pull up the indicator for TradingView, it tends to hang for a while. Okay, so this is the RSI. So there is still no clear bearish divergence for it yet. Right, still going to show a higher high on the daily time frame despite being in a overbought region over here. All right, so still maintaining that bullish bias on a short-term intraday basis for gold. All right, so now let me share with you a particular chart of the day. So now will be the second segment of the daily dose, the chart of the day. So with that, let me expand my screen so that you guys can have a better view of the chart over here. All right, so my chart of the day today will be taking into account of the release of the US banks Q3 earnings. Over here will be the SPX, all right, the SPX 500. Why SPX 500? Because those US banks has a higher weightage in the SPX 500 compared to the Nasdaq 100. So what I could see over here is that it continues to trade above my first support level that we highlighted yesterday, which is at this 6,618 level over here, and price action continues to be at going back or reintegrate back above the medium term ascending channel from 23rd of May 2025 low over here. That is the channel support after that breach on last Friday. But after that, due to that taco trade coming back into the picture, that means Trump always chicken out, price did that bullish reversal again over here. And also yesterday, that taco trade also got kind of reinforced after we have that news flow over here from that US Treasury Secretary. Okay, where is it? Give a minute, let me share you guys. So yesterday, the US Treasury Gazette saying that that Trump meeting at the end of this month potentially could happen. All right, so that meeting will take place on the sidelines of the APEC summit that's to be held in South Korea on the 31st of October. So because of this rather less hawkish rhetoric from Bassett, that also causes the US stock market to be trading in a firm footing yesterday. So unless we have an hourly close above 6,690 today, then I would tighten my short-term pivotal support to 6,618. So for now, 6,618 will be my intermediate support level to be look out for. Pivotal support still remains the same at 6,570 over here. All right, so still maintaining that bullish bias on the SPX 500, given the fact that as the US earnings season kickstart today with the banks over here that has a higher weightage in the SPX 500. So a breakout above 6,690 with an hourly close above it thereafter. We will tighten my short-term pivotal support to 6,618. Then the next resistance level to watch out for will be 6,730, followed by the all-time high area at 6,770. Only a bearish breakdown below 6,570 will invalidate today's intraday bullish bias to have a dip down to retest last Friday minus swing low area, which is my pivotal medium-term pivotal support area at 6,506, 6,500. Yeah, so this will be my chart of the day. Bullish bias on the SPX 500 with the key levels to watch out for, as I mentioned earlier. So bear in mind, now let me go through the third segment of the daily dose. So why the SPX 500 will be my chart of the day? Because of the key earnings result release thereafter later during the before the start of the US session. In fact, we have a slew of major banks reporting and financial institution. So JP Morgan will report, Goldman Sachs, Citigroup, BlackRock, followed by Wells Fargo, all of them reporting before the start of the US session today. So right before the opening bell of the US session. So you'll report somewhere around Singapore time, roughly between 5 p.m. to 6 p.m. All right. So that will be a slew of major banks and financial institutions to watch out for today that could have a significant impact on the S&P 500 movement. Why? Because they have higher weightage in the S&P 500 as compared to the Nasdaq in the Nasdaq 100. So other than these banks' earnings to look out for, what other important data to look out for on the economic calendar for today? So very quickly, let me share with you guys over here. So heading into the US European session at 2 p.m., we do have a slew of labor market data out from UK, the unemployment rate, followed by the employment change, so that could potentially impact the sterling pound, the sterling crosses, and in some form the UK 100 CFD index over here. And followed by 5 p.m. Singapore time, we have the Eurozone ZEW Economic Sentiment Index that is out at 5 p.m. Singapore time that could impact the euro dollar, the euro crosses, and as well as the Germany 30 CFD index. And at 8:45 p.m., we have a Fed Bowman speech as well coming into it. Federal Reserve officials speaking, and also at 9 p.m. Singapore time, before the start of the US session, we have the release of the IMF World Economic Outlook. So that could potentially have some form of impact on the broad-based cross asset classes if the IMF Economic Outlook forecast starts to either get upgraded significantly or downgraded significantly. So that will be at 9 p.m. Singapore time today. And also heading into the early Wednesday session on 12:20 a.m. we have Fed Chair Powell's speech. So he's being invited to speak in a we call it some economic society club, if I'm not wrong, at 12:20 a.m. So Fed Chair Powell's speech will be watched very closely. So if he starts to mention anything related to the monetary policy guidance, that could actually shift the dial of the ongoing dovish increased Fed rate cut bets has been priced into the market, and that could potentially influence almost all major asset classes. So that will be at 12:20 a.m. Singapore time, early Wednesday morning tomorrow at 15th of October, Fed Chair Powell speech. Then at 1 a.m. we have BOE Governor Bartley speaking in some as well is that will potentially shape the sterling dollar in some form, and as well as the sterling crosses over here. And right before the start of our daily dose tomorrow at 9:30 a.m. Singapore time, we have inflation rate key data out from China, inflation rate followed by PPI. So if this inflation rate and PPI data continues to improve in China, that could potentially reduce that inflationary risk spiral, and hereby creating a positive feedback loop into the China stock market, and in some form also creating a positive feedback loop into the Hang Seng indices as well. So that will be at 9:30 a.m. Singapore time before the start of daily dose at 15th of October, Wednesday tomorrow. All right, so with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.